I'm Ashton Addison from Block West Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Wes Cecil, the Chief Strategy Officer of StructureFi. Wes, welcome to the show, and thank you for taking the time.
Thank you, Ashton. Glad to be here.
You're very welcome. Excited to dive into everything Structure is working on, but I would love to start our conversation with just a little bit on your background in academia, finance, and how that led to you working with StructureFi.
Well, I was a college professor for over 20 years, and then when I decided to leave the academic world, I met Brian and the other founder, the two Brians who are the founders of Structure, and because I have a lot of knowledge about global issues and finance and the world in general, they thought that it might be helpful to have me come on board and reach out to different geolocations and understand the different kinds of societies that we'll be interacting with and this sort of issue. And boy, what a change. It's a different from academia out here, but it's exciting to be able to take a lot of what generally people think of as abstract knowledge and apply it in a very concrete way in the real world. So it's been a fascinating adventure for me. There's so much to learn, and I think one of the promises of crypto that has been and is fulfilling is it's a global world. And for too long, all of our financial and economic lives have been in silos that just creates barriers between people and activities and businesses. And so I just think it's been a great and interesting opportunity to be able to work with Structure and pursue these kinds of greater goals of bringing people, together, essentially.
Mm-hmm. That's great, and I agree. It is much more exciting. Even people from Web 2, Google and these top companies in the world are jumping into the world of Web 3 and crypto because there's just so much more to learn and all these different opportunities, especially with the global finance increasing. And speaking of that, let's just dive into Structure. For the viewers that didn't see our last interview with the co-founders of Structure, maybe you can start with what is Structure working on, and then we'll dive into that.
Yeah, so the goal of Structure is any asset anywhere at any time. It's a simple, difficult to execute, but simple in concept. And if you're in the developed world, United States, Europe, you have fairly decent access to markets. Although Robinhood demonstrated that even in the United States a few years ago, all kinds of issues kept people out of the markets who wanted to trade. And then when they made it simple, when they fractionalized ownership, hey, all of a sudden millions of more people said, hey, this is for me. I can participate in this activity and I would love to do that, and all kinds of fun things happen. We're trying to do that on a global scale. And if you think we have restricted market access here, in much of the world there are no reliable markets, investments, assets for the average person to access, no way for them to do that. And so the kinds of investment opportunities and earning opportunities that exist in the first world, being able to extend that globally, and there is a real hunger out there for that. So we're working on eliminating all the barriers, cost, simplicity, making it mobile first. In much of the world, people don't have computers. Think something you might take for granted, like, oh, everybody has a laptop. No, in a lot of the world, everybody has a smartphone. And so making an app that is specific to that, and simple for people to use. This is what we're really about, is allowing access and eliminating all those points of friction that keep people from having the opportunity to participate in the markets that a lot of the people in the wealthier parts of the world take for granted.
Mm-hmm. You're right. There, even with the growth of Robinhood, it still seems like there's a lot of barriers to entry to get into the world of finance, especially outside of the United States. When you say global finance, there's so many countries that want to get access to the U.S. stock market, and there's also cryptocurrencies as well. When Structure puts out a product like this and just says, all right, world, invest in stocks or crypto, is there a place that you see as the first movers that are eager to get into this, or do you just sort of let it open to all countries?
Well, it's a mix. It's a mix. There's the hunger is there, and particularly so. Just as an example, one of the things that we do a lot of research on and are looking into is if you're in a high inflation country, you want to transfer some of your savings, for instance, because your savings are just deteriorating over time, into a reliable asset. And so it might be a stable coin, could be Bitcoin, could be Tesla, something like this, that even if your interest at first may not be to, hey, I want to make money, I want to just not lose money on my savings. I want to have a secure location to be able to save money and maybe earn a slight return. But their first step is just not to lose money by holding it in cash, whatever your cash equivalent is in your locale. And so regions like Nigeria, Venezuela, Argentina, and Latin America and Africa. So one is market fit and finding out where people have this hunger, which is a lot, by the way. The other side is regulatory compliance. We're a strong regulatory compliant company. We believe in this, and so when you have several hundred countries, you have several hundred regulatory environments in which you need to operate. And so part of it is also finding those countries where the regulations and our approach fits well, and we can work with the local environment so that we make sure that we're doing everything legally and that our clients are protected. And so, that every step in the chain, we're very compliant and our users are protected. Because, it's one thing for a company with lawyers to do things that maybe are a little sketchy. And, I don't want to name any names out there, but recent history shows that a lot of, there's been some sketchy activity in the crypto world. And our approach is to say we want to protect both ourselves, of course, but more importantly, we want to protect our users and make sure that there's not going to be some blowback for them because some company has done something that gives them risk exposure legally or financially. And so matching those country fits. And by the way, as chief strategy officer, one of my big challenges is to say, we're a growing company. We're available in over 80 countries right now, and it's like, okay, what markets do we want to target that we think best fit our model given our limited resources? And then we grow and go, okay, that country looked good and it worked well, and now we'll go to similar countries and then see if we can replicate this success. So we're right in that process right now of talking to lots of local people in different countries and setting up relationships. And getting to know learning about what's out on the ground. And just as an example, your listeners may be interested or not, I don't know, but like the Philippines and Indonesia, which you look on a map, you think geographically they're in similar places, industrial, completely different approaches to how they think about crypto, how they think about money, how they deploy money. I mean, they're just almost 180 degrees opposite. And so really getting that local knowledge and working with people on the ground is what we're focused on right now.
That's great to hear that you're, staying in the lay of the law, but also trying to make it easy for people that, that they haven't even had a bank account or they're unbanked or underbanked, not going through some tedious process that's even more scrutinous than the banks in their local area. And that's part of the reason why they haven't been a part of the financial system, is because they don't have those credentials. How do you balance that in trying to onboard people easy with the user experience and not require too much information, but ensure that you have the proper information for people that want to put their funds in?
Yeah, well, we don't balance that because it's KYC AML, right? Like everybody probably knows, know your customer, anti-money laundering is a real thing, and so it's a huge barrier in some places, not so much in other places. In fact, we've been surprised. We've got really good clearance in some geolocations in Africa where you think, oh, this is going to be a problem. Turns out they're very good at it, and part of it is how motivated are the people that you contact. And it turns out when you get a motivated user base, they tend to clear at a pretty good rate. And part of it is some countries don't actually have photo IDs. It's not a standard issue element. And so, this makes it difficult, but there's no hedging on KYC. Again, some companies have done this. We're not one of them. We're KYC compliant and AML compliant, and we think that is important. In fact, I think for the long-term growth of international finance and bringing on people on board, that is one of the biggest areas, is to say, hey, this is good. This is not just criminal activity. There's all kinds of real-world use cases that people are desperate for. And I think when companies try to cut corners, it damages everybody. It gives the users a bad taste in their mouths. Again, the investors get exposed to risks that they don't want to take. The users get exposed to risk and looks bad in the press. So let's not do that. Let's be good players around the world.
Definitely. And once that procedure is passed, and they want to start investing in the assets of their choice, how much choice is there currently on structure in terms of just the top cryptos or all of the stocks or small cap coins, and where do you limit that?
Yeah, right now we are focused on some of the biggest blue chip stocks and crypto. You would recognize all the names, Tesla, Bitcoin, Ethereum, Matic, right? All the big names. We're in the mode now because a part of it was just to test our systems again globally, right? Like we can't test them one time and go, oh, it works. We have to test them many times, and so now we've got good confirmation on that signal. We're getting ready to add, and by the end of probably fourth quarter this year, we'll have several hundred more assets from around the world. And part of it is we've been focused originally on noted U.S. stocks, Google and Apple, things that people could recognize and go, oh yes, I know what that is. I know that's a valuable stock. I know it's safe. And as we add many hundreds of more assets, which we're just in the process of doing, we also need to help educate our clients. Mm-hmm. Right, so we don't want people coming on and randomly investing in things they've never heard of because they're there. And so part of it is building out a responsible system of education and outreach and being able to say, hey, we've added this class of stocks, maybe from the Frankfurt Exchange, the DEX in Germany, and so here's some of the big ones, here's their background, here's why they may or may not be good investments, here's the market return over time. So it's both we could just throw up 1,000 assets and go knock yourselves out, kids. But I think it's, that may not be the most responsible approach. Better to have a system where we're letting people, bringing them on, making sure we've got the blue chip stocks, and then helping people understand what it means to invest and participate in these markets.
Mm-hmm. Okay, that's great to hear, and nice to see that you're continuing to add more assets and sort of be a little choosy about what's there, especially when people are just getting in for their first time, to make sure, I've met numerous people that they just get into cryptocurrency and they have a portfolio of dog coins because they were going up, and all of a sudden their portfolio is worth zero. And usually that's a top signal for me, but good to stay diversified. And it's nice that you also are be able to diversify outside of cryptocurrency within structure as well. So that's great to hear. Now, what would you say sort of main difference if somebody was like, oh, well, I use FTX as a cryptocurrency exchange, and like I bought Bitcoin on there, and I also was able to buy a stock on there. Is it similar, or would you call it a cryptocurrency exchange, or what would be that main differentiator?
A couple of differentiators. One with free trade, so there's no fees coming or going. So two, we're going to have vastly more stock assets than they will, and over time we want to build out other assets as well, like bonds and commodities. For us, it's just a bandwidth issue, and also again education issue for our users. Right, we don't want to just add foreign exchange trading with nothing. I mean, the famous people go think trading forex, and then all of a sudden bad things happen to them. So it is both a responsible way of adding them educating our clients as we go along. And so it would be a vastly greater array besides crypto. We'll have all the crypto that, for instance, FTX will have, but we'll have a lot more. The other side is tokenization opens up, a whole range of possibilities. The example that I like is, let's say, I had some nephews that just graduated from college. With tokenization, I could send them hey, I could send you some money. Here's some Apple stock. Here's some Google stock. Put it in your wallet, and you can hold that, and then over time get you started on this journey of investing and earning returns. And they can. It's their wallet. It's held by them. They have it. And just sort of, you can actually shift it this way as like gifts. You could use it as payments. You can In the future, we'll be able to put it into DeFi protocols that maybe want to earn interest on or do other sorts of investment opportunities. So it's both the diversity of assets on platform will be much greater, and then what you can do with those assets, off platform, hold them in your wallet, like I said, or giving them as gifts, using their payment. That's the real vision that we have. Yeah, and again, more is coming.
That's really cool. And speaking of sort of the DeFi and decentralized exchange movement, which continues to grow, is that a part of it now, or planning to be a part of it, where, say, you can do a single-sided earn on Bitcoin or Ethereum? If you bought some Ethereum, you're looking to hold it long-term to get interest on that, or to sort of access liquidity pools or DeFi protocols. What's Structure's stance on that?
So that's, again, we're not going to be, right now we don't have that integrated on the platform. But when you tokenize a stock, what you do is you make it so the user can take it anywhere, right? It becomes available to interface with any DeFi protocol that they want to interact with. We're going to be partnering with some in the future as we integrate this more closely and as the protocols themselves develop, because this is all new, the tokenization aspect of stocks and other assets. But yeah, this will open up a whole world of possibilities for the users. And part of it is to say, you can buy a stock and hold it. This is the traditional method. If you're a wealthy investor today, this is not what their money managers do, right? Like if you've got $100 million in BlackRock, they don't put it in a shoebox labeled Apple stock, right? They are loaning against that, borrowing against that, leveraging against that. They're doing a lot of sophisticated earning opportunities for their clients that the small investor, even a relatively large investor, does not have access to. With tokenization and then integrating with the DeFi protocols, this whole world of possibilities opens up. Now, this is a little more sophisticated for people. I think it will be a subset of our users that say, hey, yeah, I want to go explore that world. But that opportunity will be there. And I think it's huge. If you think about the U.S. pension fund system, it's trillions and trillions. Mostly it just sits there as far as the user can see. Like if you have a pension fund or a 401k, but the big firms, again, they're always using that money for something, loaning it, leveraging it, liquidity, using liquidity to gain interest. And it's like, why can't the little person do that? We think they should be able to, and DeFi makes that possible.
Incredible, and I'm looking forward to that. It's almost like the next evolution of Robinhood, where not only are you getting access to stocks, you're getting access to the best financial products that the top firms in the world are using. So I'm looking forward to that on Structure, Wes. And for people that want to start trading, whether they're in a developed country or anywhere in the world, do they download the app and register through there, or what's the best way to get started? Yeah,
just go to structure.fi. You can download the app, Google Play, Apple Store, and just follow the simple steps. And KYC will be there because, of course, we're KYC compliant. So probably your listeners are familiar with this process. And it's pretty painless. I think we've done a great job. We've done a lot of work, by the way, in smoothing that process. We're pretty, a hat tip to our engineers and our UX designers who've done a great job of making that a pretty painless process. And then you're ready to go, and you can see the assets. In fact, if you just download the app, you can look at it before doing the KYC. You can go through, see the assets that are on there, see what you can do. Get a sense of what's coming, get market updates. All this is built right in there right now. You don't have to deposit money to see what you can do. You can download the app and start scrolling around and messing around with it right now.
Great, and I will leave that link in the description box below as well. Thank you so much for the insights on StructureFi and the global markets, Wes. Appreciate you taking the time, and let's follow up in the near future.
Oh, great. Thanks, Ashton. Appreciate it.